Thanks everyone. Definitely a very engaging and interesting bunch of panelists. Without further ado, let me jump to the first question. Can you share insights or examples where diversifying into alternate asset classes or adopting prop trading or newer technologies is impacting the brokers that you're working in terms of their growth? And what are the key factors that you see are making them successful? I'll try to keep it to two panelists, and please jump on if you have your views as well. I realize there are two Andrews, so I'll keep Andrew Sachs and Andrew M. Yeah, so we keep it easy. and Nick. So can I get Andrew Sachs and Nick for you to give some views on that?
Absolutely. That's a really important thing that is current. And moving towards other asset classes is now starting to get into full swing. Even here today at this conference, there are brokerages which are talking quite openly about how to keep their existing CFD clients active and keep them very much up where they are, but also to add other asset classes and be able to do so dynamically. That's the key. We've seen recently the move towards futures and options being quite an important dynamic. And it's not so simple to do that if the technology structure that the brokerage has on board is only designed to handle CFDs and doesn't have the ability to scale itself forward to be able to connect to exchanges such as SIBO, and we'll go into that as well. But of course, having to reinvent the wheel and go and start all over again with a new platform either results in fragmentation because they end up with a separate platform for listed derivatives as well as a CFD platform, meaning that it's not possible to cross-sell or have CFD traders move to different asset classes and then stay with the brokerage longer and start doing exchange-traded products, which is kind of a natural progression up. It's a sort of progression upwards from CFDs, but it's also an issue whereby it's more a case of having to homogenize and have one platform that can handle every asset class, and that way it's a fully scalable move. Because of course we've seen, as you said, we've seen options and futures. What's next? There may well be another new asset class that is suddenly popular. And of course, now we're seeing that traders are much more, the retail traders of today are very, very astute, especially the newer generation. They are not how they were years ago when the retail trading industry first started and the industry had to educate them into the way that the industry wanted them to behave. Now they're coming with already predetermined ideas of what they want, very informed, used to using all sorts of intuitive applications and mobile apps and things like that to be able to trade from, and they come with high demand. So therefore, a brokerage has to be able to offer such technology, offer such ways of interacting with their clients, at the same time have to be able to dynamically add other asset classes according to client demand.
Thanks, Andrew. Nick?
Yeah, I think Andrew makes some great points. As clients become much more sophisticated, we're very clearly seeing that demand for potentially less speculative products or more sophisticated products like futures and options. It's not so much an additional asset class, but certainly one example we've seen is eToro launching their eToro Money product, which is essentially a set of multi-currency accounts with a Visa card issued over the top of them, which enables those more sophisticated customers to be more engaged with their brokerage, essentially using it as a cross-border payments facility, and particularly with high net worth customers who have either investment properties and other asset classes held overseas, or indeed who travel a lot. Effectively their brokerage can become like a quasi-bank to them as well. I think this kind of satisfies a few of those demands. Firstly, clients tend to hold their money with their brokerage. They tend to spend the money off that card. So more of their financial activities tend to get consolidated within the brokerage, which again, you have a higher percentage of wallet share of that customer. They're less likely to go to another provider. And we're sort of seeing the reverse trend now, I think, with digital banks who are starting to offer investment products to their clients as well. So we're kind of seeing other financial institutions come in the other direction. I think it's important for brokerages to be cognizant of this and I guess heading back towards that more transactional activity, which clients tend to interact with every single day.
Thanks a lot, Nick. I think I see the reverse in our set of customers that we serve. So one of our biggest customers in Singapore is a futures options broker. Now they are starting to offer FX to their, not only to their retail, but also the institutional. So I agree that multi-asset is definitely the way to expand for most of the brokers that we are serving. Great. Second question, Adrian and maybe Andrew M. How do you see emerging technologies like AI or blockchain and DeFi reshaping the trading experience, especially for brokers expanding into alternate assets? What challenges and opportunities do you see these technologies present as well? Adrian?
Sure. So in the context of AI and other than the obvious, the world coming to an end when Siri and Alexa decide to kill us with our smart toaster at home, look, we're definitely seeing an increased uptake in AI and large language models, which is transforming data consumption. Users in particular are expecting these models to handle large amounts of data slicing and generate insights off the back of that. We expect the barriers of entry significantly to lower, so for users to be able to sort of backtest sophisticated trading strategies using these type of models, which is why we're certainly invested in making sure that we're using these models, we're capturing these large language models, but also making sure that the data is correct and accurate, and not hallucinating and basically producing rubbish.
Thanks, Adrian. Andrew?
That's a very nice question to begin with. And if you may all see, AI is now literally everywhere. The new phones are coming with AI. Everything, it's all based on AI. But the only thing we should remember about AI is, first of all, initially it was created as the utility tool for people around to use that, to utilize that for more informed decision, gather more insights, obtain more information in a more effective way, in a more shortened time. So yes, definitely. AI, I'm 100% truly believe, and everyone, I guess, correct me if I'm wrong, but everyone would agree with me that AI is literally shaping the behavior of the end user. Because by the end of the day, it's still about the end users. Whether we're on the side of the liquidity provision, service providers, brokerages, it's all about the end clients and end users. In particular, the integration of AI, I definitely inform trading decisions, 100%. How it may be utilized for the sake of giving additional benefits from a business standpoint, that's a question, that's debatable. This is where the blockchain itself technology may be in place. However, I do not really believe that DeFi is the key, especially for the brokerage business. Like, if we're looking at the broker setup all over the globe pretty much, even the majority of the exchanges, they're all centralized. The problem is that as soon as it goes decentralized, there is no ability to, first of all, to have full control over it, and secondly, to be able to manage that properly and service your customer. So definitely, AI, 100%, is shaping and would be shaping and would be improving. Blockchain as the technology, for the sake of the transparency, for the sake of the money movements, for the sake of the payments. Of course, it's there, and it's been there for a couple of years already, maybe 5 and more. DeFi, well, I would rather say not, but we'll see. It will just make our life easier. It will make our life more efficient. I truly believe in that, at least myself.
I think actually, Andrew, there's an interesting point that you made there about the way that AI will shape the behavior of traders, because I think it even goes further than that. I think it will, the application of AI into the trading world now will shape the way that traders interact with their broker. Once their behavior might change, we'll see how that works out. But that change in the way that traders view information through AI, or the way they see the internet through AI, everything is changing in that respect, which means that they will then shape the behavior of the broker, the way they interact with their brokerage, which in turn will perhaps lead to a sea change in the way that the trading interface looks. And it might be that AI such as Siri, that's an AI in itself, right? Or other voice prompts, like voice-activated systems on mobile devices will mean that a mobile trading app will look very, very different to how it does today. And then a desktop app will look very different to the mobile app. And that means that brokerages, in terms of their technology, should start to look at the ability to use dynamic and different front ends as required, and not to be stuck with an obsolete interface that cannot work with an AI because it was designed a very, very long time ago, and now we have AI that's come, will change everything, and I think now there's no possibility of AI shaping the future and having any possibility of working with an obsolete front-end interface, and therefore I think that needs to be a major consideration for a lot of brokerages today.
Yeah, 100%. Thank you for mentioning that. And on top of that, do not forget that support. And again, servicing the clients, this is where AI would be the most handy.
Absolutely.
That's the point. And obviously analyzing the information on the leads basis, so on and so forth, but majority utility brings based on the support.
I would like to add something. So to the point Adrian said about the data. Two stories where actually have friends working in one of the biggest banks in the world, and they have two AIs they are testing, and they are not connected. And they found out if they asked one AI something about the other AI, the data was somehow somewhere linked, so they could get rid of the second test case because you can just run both over one terminal. And then another thing, the person was looking for an annual report of certain data, and the AI should have been constrained inside the company, and information from Lenovo came up. And Lenovo is definitely not a bank and was not the annual report the person was looking for. So it is in testing. I just want to say it's important to have the data, and you need to throw the right resources on it. It is, it becomes easy accessible, but it's way bigger than some companies estimate. And if big banks do these mistakes or learn from are in a learning period, the retail client who uses a fancy AI tool he found for free in the internet, where does the data come from? Is this something trusted? So I think we have a lot to learn, and some kind of way to decide that the client can decide, is the information from the AI something I want to rely on, or is this some cheap fancy tool I just downloaded?
I think that's exactly right, and the pedigree of the AIs is really the question here, is whether you're able to verify the pedigree of them. So I think what we should start seeing is and I think what should be considered is that brokerages should be able to offer to their clients an AI interface or an AI platform that is native and integral. And that way it's been developed in a way that was designed specifically for the purposes of being used for trading and being used in a brokerage environment. Otherwise, if it's too much, if it's there isn't such thing available from a brokerage, then that scenario might happen, which is not ideal and can't be verified. So I think brokerages are going to have to start looking at offering an AI system or an AI assistant, or you can see them starting to now be developed by some of the tech providers. Otherwise, it's very difficult to verify the pedigree, and you will find Lenovo coming out, as you said.
Okay. So we'll try to keep our answers short, otherwise we'll land up only with 3 questions. Anyways, I think it's definitely a question that demands a lot of airtime. If we are in a tech conference and a panel not discussing AI, then we are in the wrong group with the wrong group of people anyways. I think I have one very interesting story. AI, while it is solving a lot of complex problems, I think cost saving is definitely one of the use cases that will become prominent in the brokerage industry. I have a very real example. One of our brokers was going live. They wanted to launch a new language on the platform. Just translating a new language on the platform, if they go to the traditional mechanism, was around 20-25 grand that they would have to pay a translator. We have an AI mechanism. Initially, everyone was wary about using Google Translate. They're like, hey, don't use Google Translate. That's not something, I'm sure it won't be right. But now with the advent of the open AI and the sophistication it comes up, we were able to do that in less than 1% of the cost using the platform. So that's immediate benefit that AI is deriving. I'm sure as we unfold in the next 5-7 years, we will witness a lot more transformation, whether it's in the interface, whether it is in data, analytics, or whether it is in terms of the sentiments that people are. That brings me to the next question. How are brokers leveraging alternate data sources, especially in the context of sentiment analysis, and stay competitive in the emerging asset classes as well? What practical steps can they take to implement these strategies? Maybe Dennis and Andrew Sachs or Nick, you can jump in as well.
That's actually also, Adrian, you can probably help with this a bit, because I think market data feeds from exchanges and being able to provide them through a back-end system that handles multi-asset is very important and can be done for a reasonable price these days. So I think that having a trading platform which shows all instruments, including futures and options and listed products on the same account as CFDs, and having a market data feed direct from a exchange is a way forward. And in some cases,
would you like a job at SIBO?
there you go. So I think it's quite a way of showing good quality, direct, real-time data to retail customers like that. And there are certain platforms, like our platform is multi-asset, was designed as a multi-asset platform beginning out. So of course that is very, very possible, and it can be done for such a reasonable price that brokers can not break the bank when they are actually trying to offer a genuine multi-asset way of trading on SIBO or CME or any other, or exchanges in different continents. So that's one way. And then of course the brokerage would either directly certify the platform against the exchange so that you're using it as a direct access to a centralized counterparty, or go through if they don't want to pay the exchange clearing fees, because that's where it gets very expensive, then you can go through a middleware, but you would still be executing on that exchange and getting, more importantly, the exactly correct market data prices.
Yeah. No, thanks very much, Andrew, for doing my job for me. I think you touched on fragmentation before as one of these sort of key challenges, especially around data sourcing. I think in the US alone, there are 16 equity exchanges, 16 options exchanges. In Europe, there are about 170 different venues you can execute a share. So, you really almost got to be an expert to figure out where to source that data and content from. So, look, not to spook SIBO too much, I think we're sort of well positioned globally. We operate around 26 markets globally across 6 different asset classes, including equities, options, FX, futures and the like. And we've done a lot of work post-acquisition of Chi-X Australia and Chi-X Japan and the Canadian market to consolidate that onto one technology stack so that participants and vendors can essentially access that data from us, one messaging protocol, either direct from data center, via our vast vendor network and partner network, and now available via SIBO Global Cloud in AWS as well. So something we're very proud of. Good question. Thank you.
I would like to add something to your point you said about the sentiment, and I think it's important to know your place in the industry. So sentiment is very interesting, but it's baked in the pricing most of the brokers are receiving. So as a broker, maybe as a retail broker, maybe it's not that interesting to try to look at sentiment. You maybe want to compare yourself with the peers. So like some cross-reference with other brokers, and so look where the others are and not try to figure out what the bank up the chain or the big players have done. So I think it's important to focus on your field where you operate. So it's a different field for you, a different field for a smaller retail broker.
Yeah. Nick, anything you would like to add? Okay.
Just impressed at Andrew Sachs's sales job of CBOE.
Yeah. No, I think sentiment, I would slightly disagree with the sentiment analytics that is not applicable to retail. In fact, a lot of our customers today are using, depending on obviously the scale of the broker, they're using the data of the transactions that they are executing, their retail traders are executing, and using that as a service or API they pump into hedge funds and to other service providers to use that sentiment analytics of the retail to make decisions that they are doing at the hedge funds. So it is a mix of both. Yeah. I'm going to move the questions around.
I think that's actually really important, AB, because I think that brokerages who want to go down the multi-asset route, it seems simple on the outset, but there's much more to it than just saying, okay, this platform can cope with multi-asset, because operating futures and options and other is a more, because there are more components involved, there are centralized counterparties involved, that's important. So I think that being able to have a system which you can either certify directly against exchange, or you can do it that way. And having the flexibility to be able to do either is really important, because that way you can scale the brokerage and handle different clients on different exchanges differently.
Fantastic. Thanks. I'm going to move around the questions a little bit in the interest of time. From your perspective, what underutilized tools or approaches have the most potential for driving broker growth, particularly in the areas like prop trading or alternative methods? Nick, maybe you want to take a jab, and Andrew, or?
Yeah, maybe not so much in the prop trading, but just from our experience, and certainly with the brokerages we work in the region and globally, the thing that kind of defines the ones that are being really successful is getting those basics right. So things like very basics, getting money to the client, receiving money from the client, doing so in a near real-time environment, and being able to do that consistently is the thing that drives trust. If we look particularly around CFD brokerages, and it's always been a historical problem, if we look at any of the forums, which are very key to driving business for most brokerages, one of the central complaints that every single client has is money not coming back to them on time, going to a different account, that process not being effective. So I think certainly now, as we start to see more real-time payment networks coming live in various different countries as well, the other aspect of that side of it, accepting funds or paying out funds to a client, is that historically, particularly CFD brokerages have been accepted payments by card. And again, historically, that's not been necessarily a cost-effective process to undertake. Now, with the advent of these real-time payment schemes, you can both collect and pay out funds from clients in a real-time environment. So it's not very sexy, but it's one of those things that certainly reduces complaints for those of us who work in the ASIC regulatory regime, of course. Things like AFCA complaints are a very expensive process to go through, very cumbersome, and typically drive lots of customer dissatisfaction. And the people that are prospering in our market, I think, are just doing those real primitives very, very well.
Thanks. Andrew?
Yeah, just maybe adding a bit more on Nicholas just mentioned. I would name it in a sort of way like ecosystem approach. This is what literally may lead to the success. Of course, we can put aside all of the regulation, everything. We're just looking from the tech perspective and the modules perspective. The ecosystem approach, what do I mean by that? Then inclusive of everything that may potentially be needed by the client. If they're willing to, example, it's a prop trading, they're willing to do payments in using Visa, for instance. Why not? They're willing to do it through crypto. They are willing to do it in this type. They are willing to trade multi-asset. They are willing, all of those is ecosystem approach, is for provider or for an actual business to be able to cater to as many clients' needs as possible and potentially make it happen within one UI, one interface, one ecosystem, one roof, because in this case scenario, the money would not be simply leaving the business. And this is what businesses really need. You may call it, they need to entertain their customers properly or otherwise serve them and bring utility. So ecosystem approach, I would say, is the key, and obviously the compliance. That's 100% is the key factor, and without that, your ecosystem may not work that well. Whereas in comparison to the one who's properly regulated, everything doing by the book and everything. So yeah, the combination of those and great marketing. But it's, I guess, come without saying.
Fantastic. Thanks. I think in the space that we are in, a lot of our customers are retail brokers, and one of the things that I feel is underutilized is 80% of most of the retail brokers, at least in Southeast Asia where I come from, is based on IBs. The way they are running the IB business is so traditional. I think they are yet trying to invent or evolve themselves. A lot of them are just based on referrals or rebates and stuff like that. We realize that more and more the acquisition channel has to be attractive, not just incentivize for passive approach, but also provide a mechanism to incentivize based on actual performance. So include AI and capability in the platforms to provide not just as an interface, but to enable them as a sales pitch, I feel is a low-hanging fruit for most of the retail brokers.
And also be focusing not only on the target audience of the brokerage, for instance. That is why coming back to the ecosystem approach. So as well as potential clients and IBs who may bring business to, imagine, crypto exchanges, may also do good business for your brokerage by the end of the day. So diversification and ecosystem.
Absolutely. Great. Last few questions. We have just 10 minutes more, so maybe a couple of more questions. What are some of the most significant challenges you've encountered in innovating software for new trading models or in the context of your verticals that you're serving, and how did you navigate these challenges? Maybe 1 minute each or 2 minutes each, not more than that. Adrian, I'll start with you.
Look, I think I already touched on one of the key challenges being sort of fragmentation of markets and how we've sort of been able to consolidate our data feeds and wrap them into one sort of counterparty agreement, so you're not having to deal with 10 or 15 exchanges and 10 or 15 exchange audits potentially. But one of the other sort of great products or features we've added was basically targeted towards the issue of investors in the Southern Hemisphere wanting access to trade US markets and not potentially wanting to sit up at 2 a.m. or 3 a.m. at night. So look, off the back of that, as a result of that feedback, we recently launched pre and post-market hours for US equity market trading. So just an easy way for investors to get an extra 4 hours pre-market or 4 hours post-market trading in obviously the largest market in the world. So yeah, you can trade your Amazons and your Teslas and your Apples and those sorts of things and still get a good sleep at night.
Thanks, Adrian. Dennis?
Yeah, so I think the data is a big point, so how much data is around there. We onboarded a broker with like thousands of symbols, if they all just on a standard platform ticking 25 times a second, and then there are 100,000 of clients behind it. And what the broker actually wants, in my opinion, often is to understand if the client is profitable, if the broker want to take on the risk, or if it want to offset the risk. So the broker has multiple platforms, multiple clients, multiple symbols, and all this to summarize into one place where they can understand what is the let's say what's the strategy or what's the behavior of the client and making a decision. Where I was back in the days like in a night shift doing an end of day report of profitable clients and not so profitable clients, which was a end of day task, and now this went to an hourly, and we went down to a 5-second update rate for markouts to make a decision. So I think that's the challenge I'm focusing on with the company. It's about being speed and being right. So you sound interesting, I will look into this. But I'm focusing on the speed.
Andrew?
Yes, I think that's right, and I think that also the way that we will see the multi-asset aspect, like you described, Adrian, where you have aggregated those markets into a way that's easily usable by a retail trader. We're going to have to see a shift towards making the actual interface that the platform that the trader enters the market with more user-friendly and more dynamic like that, so that it can handle that kind of thing, as well as to bring the listed products to a retail audience in a very sensible way, that they are able to access those markets well without excess cost or without fragmentation. And we will also see a need for this level of development to be present in the back-end area of a trading system, whereby a move towards having a comprehensive core trading engine where every asset class can be handled, every market can be handled, and every new type of dynamic that comes along is able to be operated by such a back end, so that a brokerage is scalable and doesn't have to keep reinventing the wheel or having several different systems every time a new dynamic happens, because doing that is retrograde and counterproductive. It makes matters more difficult and more operationally fragmented, expensive for brokers. So I think a dynamism to be able to encompass multi-asset trading, to have intuitive front end, a choice of intuitive front ends and mobile platforms, so that all types of brokerage in all types of trader and all types of capacity and experience level can be handled, as well as a streamlined and dynamic brokerage operations. So I think a whole tech revolution is about to start, where the obsolete will be replaced with the ultra-modern.
No, absolutely. I mean, one of the things, and it is a bit of a segue, and unfortunately I couldn't get a word in before because you were speaking so articulately, but we've also seen, and this comes back to ease of access, we've seen a surge for real-world assets on chain as well. So again, one of the initiatives we're working on, we have donated. Actually, sorry, we don't do anything for free. We haven't donated our data. We have provided our data to the Pith Oracle network. So yeah, a subset of our US equity data, which is available on that network. Still early days, but yeah, we're certainly hoping and expecting that'll remove one of the barriers to data and access and leverage off that sort of blockchain technology.
Sure. Maybe I'll jump on to the next question so that Nick and Andrew can jump in, and hopefully we'll open up for questions. Given the advent of so much of innovation technology, how do we balance it with security, both from a compliance perspective as well as from a tech perspective, given Visa is obviously one of the pinnacle in terms of standards that everybody wish to emulate? Would love to hear your views on that, and also Andrew from you, and anybody else would like to jump.
Yeah, without pushing the Visa line too much, we have lots of tools that we can utilize, our customers can utilize and purchase from us to help with that. Kind of interesting, it dovetails back into the conversation around AI as well, because again, it's not that sexy, but certainly one of the areas where fraud detection and prevention, AI is just creating like a massive leap forward in capabilities. And obviously because there's just so much data that needs to be combed through to power those capabilities, and AI is perfect for it. And inside Visa, there's massive adoption of that in terms of capabilities. But yeah, like this is a thing that brokerages need to balance. And again, sort of coming back to those real-time payment networks as they open up as well, we've seen some challenges with those in certain jurisdictions, and Australia is not immune from that, particularly around sort of fraud that's associated often with crypto payments. So that is a challenge. I think one of the nice things that's happening to support any type of financial service business is that things like confirmation of payee coming in most jurisdictions as well. So that can certainly help to cut down on fraud. And there's a concerted effort by financial institutions in particular as well to support other financial services businesses in detecting and preventing that fraud.
Thanks, Nick. Andrew, any thought on that?
Yeah, definitely. From the perspective of traditional payments, not underestimating, but I guess all of the rules, all the mechanisms are already there, already established. Of course, they're all adapting and we need to evolve 100%. Where it comes to place, I presume it's coming to, for instance, multi-asset offering, crypto in place. In order to stay compliant and being able to operate in crypto digital currencies, definitely there are way more to explore, and there are way more to come. Like what we have now is just the first. All of the KYT checkers, definitely it's a must-have to use. All of the licensing must be licensed under different countries, under different entities. But on top of that, the security itself, whereas many customers of ours, and I guess for you it's the same, they're requesting, they're asking on the initial stages, what are the security, what is here, what is there? But the problem, not the problem basically, the security itself coming from the user. It's the same example with ChatGPT, who's been feeding this some sensitive data. Don't feed the sensitive data to the ChatGPT, and that's the thing. So there should be a certain way of awareness of the end client itself, what is secure and what not, what to store, what not. And definitely the providers, they should tailor their solution to be as compliant and as secure as possible. Of course, I can start mentioning all those tools, all those load balancers, so on and so forth, which everyone, I presume, pretty much aware of. But yeah, it's coming. It's not the one-man show or one provider show. It's kind of the aggregated basis. In order to reach the security, it's an aggregated basis. However, yeah, definitely we can find and we can identify more and more points where certain security measures and means should be implemented, not only in traditional payments but in crypto as well, in technologies, and yeah, basically that is why the AI and everything would help to evolve and to make the solution better by the end of the day.
Fantastic. Great. We have just 2 more minutes. I would like to open it up for questions. Anybody? Okay. I think our panel discussion was very clear. No, I think I would like to just end maybe with one more question since we have time. Let me just quickly go through. So in terms of payments, since you touched on payments, we didn't touch a lot on crypto in particular. What role do you think alternative payment solutions, including those tailored for emerging markets and cryptocurrencies, play in enhancing customer satisfaction and retention? Dennis?
Yeah, sure. So our thing, we are strong as a liquidity provider in gold, in DAX, in the Forex majors. But we understand the need for flexibility for clients. So we'll allow digital currencies for margining. And we have an in-house solution that the broker can bypass the payment provider, the PSP, and then we are working closely with a custodian, FCA registered, so that everything is transparent and that everything is safe and secure.
Andrew, given that you all are in the...
Yes, I think that's right. Certainly from a client retention point of view, as you mentioned, what's going to happen in future is that you can see this is a totally non-tech issue which can be solved via tech. So marketing, you can see that the cost of acquiring CFD clients is huge now, and the short lifetime value is a problem. And these are usually, it's an old-fashioned model where digital marketing is ineffective, it's costing a lot, and you're getting a novice trader who is going to then go after a short time, and then the company ends up making a loss, and they've achieved nothing. So being able to cross-sell and nurture traders up to different asset classes, as well as attract high-quality traders, you can do so even by doing things like integrating with TradingView, so that you can leverage the TradingView library of seasoned traders, and then who will execute on your platform. Things like that, by having their front end or integrating into your front end. Things like that are the way forward for marketing, I think, and for retaining customers. The old traditional way of retention is now very obsolete. It now has to be done through intuitive devices, intuitive interfaces, and leveraging the library of trusted resources such as TradingView, in my opinion.
Great. We're out of time, but as we bring this to a close, I really want to express my gratitude to all the panelists. A big round of applause for them, please. Thank you for being a wonderful audience. Looking forward to the next time.
Thank you.